then Martha and I will be happy to take your questions. Martha Voldomikael, as you know, is our resident representative in Colombo. Hopefully you have all had a chance to read our press release that was published yesterday and the staff report that was published a few hours later. But if you haven't, I am pleased to report that the IMF Executive Board has completed the combined 5th and 6th reviews under Sri Lanka's extended fund facility arrangement. This decision enables the disbursement of about 695, almost 700 million US dollars, bringing the total IMF financial support under the program to about 2.4 billion US dollars. This is an important milestone in Sri Lanka's ongoing efforts to durably restore macroeconomic stability and advance its reform agenda. Let me start by saying that program performance has remained generally strong despite a very challenging environment. The authorities met the key prior actions for this review, which were restoring cost recovery pricing for fuel and electricity. The end December 2025 quantitative performance criteria were met, and most structural benchmarks were either met or implemented with some delay. At the same time, there were two areas where program commitments were not observed, specifically related to external payment arrears and the application of import restrictions. These issues are being addressed, and continued efforts will be important to maintain strong program implementation going forward. So the authorities have committed to that. Stepping back, it is important to recognize the progress that Sri Lanka has made under the reform program. The economy has shown resilience, supported by strong policy implementation. The reform program has helped to restore stability, rebuild confidence, and create policy space to respond to shocks. It's important to note that Sri Lanka today is in a much stronger position than it was during the crisis in 2022, which heralded the EFF program. Macroeconomic buffers are being rebuilt, policies are now stronger, and the authorities have demonstrated a willingness to act decisively when needed. And this has been critical in supporting the economy's resilience in the face of recent shocks, both now with the Middle East shock and earlier. At the same time, it is important to say that the outlook has become more challenging, and I hope you had a moment to read our staff report, especially on the outlook and risks sections. The war in the Middle East and, of course, the aftermath of the cyclone Ditwa are weighing on the economy and have tilted the risks to the downside, firmly to the downside. Growth in 2026 is, according to our forecast, is expected to moderate to around 3% year on year in real terms. And the higher oil prices could put pressure on inflation and the external position, including through weaker tourism activity. So in that context, the authorities are appropriately providing some temporary support to the economy. A targeted fiscal easing in 2026 is helping address the impact of these shocks, including through relief measures and reconstruction spending following the cyclone Ditwa from last year. At the same time, it will be important to return to the program's fiscal objectives over the medium term, including observing the primary balance target of 2.3% of GDP starting next year, starting in 2027, and the authorities obviously have agreed and have committed to do that. Looking ahead, continued reform efforts remain essential. Sustained revenue mobilization will be critical to strengthen fiscal sustainability and support growth. Completing public financial management reforms, public investment reforms, as well as electricity sector reforms will help reduce risks. Monetary policy should remain focused on maintaining price stability, while greater exchange rate flexibility and the gradual removal of balance of payments measures will support the rebuilding of external buffers. Finally, there's a need for well-calibrated structural reforms and improvement in public infrastructure so that the government and the authorities can boost investment and raise Sri Lanka's long-term growth potential. Let me conclude by commending the Sri Lankan authorities for their continued commitment to the reform program, particularly in the face of significant external and domestic challenges. We here at the IMF remain committed to supporting Sri Lanka as it works to safeguard its hard-won gains since 2022 to 2023 when the program started, to protect the most vulnerable and build a more resilient and sustainable economy. Thank you for your attention. Martha and I look forward to your questions. And Loranda, back to you. Thank you.
Thank you, Evan, very much. Thank you, colleagues. I would like for you to please ask your questions to raise your hand. We are going to limit the questions to one, please, per person, so we can take as many questions as we can. We're going to take 3 questions at a time, so from 3 different people. So, and please use the chat feature. If you cannot talk, please put on your camera and your audio, and others who are not speaking, kindly mute. So I'll go first to Zulfiq. He raised his hand first. Go ahead.
Thank you, Evan, for your presentation, and thank you, Randa. My question is, there is growing concern about Sri Lanka's exchange rate, and how does the IMF assess this situation? Because the IMF has requested the central bank to prioritize price stability and allow for greater exchange rate flexibility. So how much more flexible does the rupee need to be, and over what time frame? Thank you.
Thank you. We're going to go next to Shihar. Please go ahead.
Thank you, Randa. My question is, now with the latest interest rate hike, the tightening monetary policy, how concerned is the IMF about the growth, and whether it can sustain the growth to basically start the debt repayment in April 2028? Thank you.
Thank you, Shihar. The third question, before Evan starts responding, is Cecilia. Please go ahead, Cecilia.
Thanks, Randa. Thanks, Evan. My question is, the current temporary fuel subsidy allowed to continue for a few more months, or should Sri Lanka match local prices, global market rates to meet IMF targets? Thank you.
Thank you, Cecilia. Colleagues, if you have already asked the questions, please lower your hands. Evan, over to you.
Yeah, thank you, Randa, and thank you, folks. Okay, so 3 questions. Let me, I'll take them in order, but then I may bring in some additional points as well. Okay, so first of all, on Zulfiq's question, so let me just say a little bit. So we view the Central Bank of Sri Lanka's monetary and exchange rate policies as based on maintaining stability and controlling inflation. Inflation, as you know very well, has fallen dramatically from 60 to 70% at the peak during the 2022 crisis to low single digits now, and temporarily a little higher in the last month because of the Middle East conflict. Let me just be clear here. This achievement is, in our view, reflects a disciplined approach, not uncontrolled money printing. The central bank has refrained from monetary financing of the deficit under the IMF supported program. Policy interest rates remain aligned with a 5% inflation target of the CBSL. The exchange rate has been allowed to show some greater flexibility and is acting as a shock absorber, and is generally a process of rebuilding foreign reserves. Reserve accumulation is continuing. It has slowed down, obviously, now because of the Middle East conflict and the need to support excessive volatility or smooth excessive volatility. But generally speaking, the direction is the one that we have discussed and agreed with the authorities. The monetary stance is broadly appropriate. The inflation is projected to remain around the 5% target, both this year and over the medium term. And now with prices stabilized and foreign reserves continuing to grow and improving as we have it in the projection, we do not see any evidence of destabilizing monetary expansion. So this is a general point. In terms of the rupee flexibility, obviously, as I mentioned, the rupee has remained a good adjustment mechanism. there's a need for prudent and rules-based monetary policy and a flexible exchange rate. And this is very important because the currency is meant to be the first line of defense in terms of external shocks. This is a real economic shock, meaning one that takes place in the real economy. And as such, there is a need for an adjustment through the real sector, through the currency and the real sector. And so this is an appropriate response. In terms of the interest rate hike that was mentioned, the second question, and growth concerns. So the interest rate hike that was announced by the CBSL this week, 100 basis points to 8.75% of the policy rate. If you read the announcement, was justified by a need to get ahead of any concerns regarding inflation expectations or inflation in general. The depreciation of the currency is going to make imports more expensive, and that may have a short-term effect on inflation. This inflation is supply-driven, but of course, because of the risk that this entails on the real economy, the central bank decided on having the view and seeing well the signals that this could entail for inflation expectations of getting ahead of these pressures. And in that regard, it's appropriate, and we think that it has a role to play. In terms of the growth outlook, we drew our numbers before, the current monetary policy hike. We still, we are evaluating, obviously, the monetary policy action that came out this week. But the 3% growth that we have and the combination of all the other variables that are playing out in the macroeconomic framework that we have, we still think are appropriate. And despite of the rate hike, we still think that growth will continue being strong. 3% is still a very strong growth rate. Obviously, the central bank has slightly higher than ours, and some other participants are somewhere in between. We think that there are good, very strong tailwinds in the economy that continue to push the growth forward. In terms of the fiscal outlook and sustaining the growth momentum and the debt repayments that you asked us, had, that also falls under the same agenda. That we feel that because of the broad macro framework, everything is okay. On the temporary subsidies, Cecily's question, and on IMF targets, yes, we have discussed the temporary subsidy with the authorities while we were in Colombo last month. We understand the parameters of this, the broad reform package, the support package. It is capped at 100 billion rupees. It is temporary. It's going to run out by end September 2026 or sooner, if those allocations for those subsidies are being consumed faster than on the envisaged rate. And they have a certain amount of targeting that we have discussed and insisted with the authorities. And we're happy to expand on this if there's any more follow-up questions. So let me pause here. Back to you, Randa. Thank you.
Thank you, Evan. I'll take 3 questions on screen and then go to the chat because we have some questions in the chat also. So I'll start with Indy White, please. 1 question at a time, as we did for the last round. Thank you.
Thank you, Randa. Hello, Evan and Martha. I have a question. What are the biggest risks you see to follow up on the currency question to currency stability in the coming months? And also, there are some economists arguing that Sri Lankan risks becoming trapped in IMF cycles. So what really gives the IMF confidence that this recovery path will be structurally sustainable and not leading the country into another IMF program?
So these are 2 questions, Evan. Then we go after that to Sampa.
Hello, thank you. Can you hear me?
Yes.
Yes.
Yeah. I want to know in the new program, because the Treasury is actually getting the IMF funds, and why doesn't the Treasury buy dollars from the market? Why does the central bank have to buy dollars from the market and expand reserve money? Can't the Treasury do it? What is the block? What is blocking the Treasury from buying dollars in the market and building reserves?
Evan, these are 3 questions, so we'll take them now and then go to the chat and then go back to the screen.
Yep. Thank you. Okay. Yeah, so good questions. So Indigo's question on the rupee and the pressure. So look, yes, there have been recent pressures on Sri Lankan rupee. There are rising living costs, and these are primarily driven by external shocks, particularly the Middle East conflict and the higher global commodity prices. It's worth making clear here there has been a long period of relative calm in the currency. The rupee in fact strengthened quite a lot. They have stabilized. The reserves have been rebuilt. So now the currency is facing a downward pressure, which is normal, and there is nothing strange in that. Economic cycles generally tend to do this. There was a period of calm and where the currency has been appreciating, and now there's exactly the opposite, where there's a temporary need for some temporary adjustment. High global oil prices affect the entire world, including also Sri Lanka. Sri Lanka's import bill has contributed to that more depreciation since the start of the Iran with the Middle East war has contributed to something like year to date something 4.5% or so of depreciation. This decline has fed into some higher fuel and transport costs, which caused inflation to tick up again to 5.4% from nearly zero a year ago, right, or 2% before the conflict. So these factors understandably heighten public concern, but this is a normal reaction. We have discussed with Central Bank, we have discussed with the authorities. The exchange flexibility is very important because rather than depleting reserves, defending a particular level, the exchange rate is meant to do exactly this: absorb the external shock and preserve ability of the authorities to react, like they have reacted with the support program they have put in place back in April. In addition, the government has introduced temporary measures, the 3-month search for the vehicle import duties, and other things, as you know very well. In terms of another IMF program or context of what could that be discussed, I will say that right now our number one priority is to continue on this program, on the current EFF program, and seeing what else needs to be done under the reform agenda. I will say that this IMF program has done a lot in the span of time that has been in place, 3.5 years by now. It's comprehensive, it's quite ambitious. It tackles a lot of Sri Lanka's long-standing structural vulnerabilities. And as you can see, there has been a multi-year fiscal overhaul. Tax revenues have increased dramatically, almost doubled. The primary budget surplus has increased quite a lot, over 5% in 2025. Have a different program targets, in fact, and a comprehensive debt restructuring has taken place, is near complete. Structural reforms under this program are very, very important and are a centerpiece. Sri Lanka has now a new Central Bank Act, safeguards very independent. They have a Public Financial Management Act in 2024 that introduces very strong fiscal rules and an escape for shocks that was called back in Cyclone Ditva. The government have implemented a lot of governance reforms, the asset recovery law, procurement, SOE laws that are being worked on right now, and so on. These are fundamental changes. So I would say that the progress that we have seen in the current program is very important. There's a lot of confidence that are being built, and we are there for the government even after this program ends. Again, we haven't had any discussion about any new programs. This is squarely on the governments and the authorities in general disposal. It will be there for them for as long as we need it, and well after this program is over. Finally, on Hassan's point, technical point about who receives the disbursement, the IMF disbursement, right? Yes, so the EFF support is for budget support, technically speaking, meaning that the support ends up with the government, with Treasury, but it does go through the CBSL. And again, these are technical issues, folks. The money the support is geared for the country, whether it goes through one counterpart and then another, that's a little bit of a technicality. The reason is that the central bank is the intermediator of financial flows, and so they have close contact with financial markets. Treasury doesn't doesn't deal with foreign exchange issues, and so this is a normal process. So there's nothing interesting or particularly strange about this. This is the arrangement for many other countries as well. Okay, back to you.
Thank you, Evan. So we have less than 10 minutes left, but I will bundle some of the questions that we got in the chat, and if we have time, we go back to the screen. So we have from Ishara a question: how do you assess Sri Lanka's future debt sustainability risks? And then Mudalil also is talking about Sri Lanka's debt, with Sri Lanka scheduled to resume full repayment of its restructured external debt in 2028. What is the IMF's assessment of the country's long-term debt repayment capacity, particularly in light of global economic uncertainties and domestic fiscal challenges? So these are almost the same question. And then we're going to take one more question. It's about, again, is there any space for Sri Lanka to go for import restrictions? I think you answered this before, but we can go over it again. And the last one from the chat is on the fiscal side in Sri Lanka. What are the IMF's main concerns? And this is from Amal. So with that, we answered all the chat questions, and we have two more in the room. So if we can go over this and then get back to the room. Thank you.
Yeah, thank you. So debt sustainability, this is an issue that we will discuss many times in the past. Obviously, debt had been quite high in Sri Lanka from the beginning of the program and in recent years. Sri Lanka has undertaken quite a significant set of reforms, including obviously a debt restructuring, which is nearly complete. Debt sustainability risks remain high, and we have described as such, if you will, in our assessment. When you look at the debt sustainability analysis in the staff report, and this has been an ongoing discussion. This is not unique into this current review in that, debt in general still remains high. However, it is very important to note that there has been significant improvement in the level of debt, and most importantly, in where the debt trajectory is heading, where you'll see under our baseline assumptions, we continue to see debt continue declining in coordination also with the assumptions that we have about maintaining a primary fiscal surplus, maintaining good economic growth over the medium to long term, and keeping inflation under control and everything else. Yes, there are debt risks, as in many countries, but under the baseline or most reasonable assumptions, we think these debt risks are manageable and should continue being kept under control in association with strong policies and also ongoing reforms to keep them under control. After some time, the concern about it will go away because as debt keeps declining, there will be more room for more productive uses of additional debt and so on. So then the risk premium, in other words, should continue falling as it has already. Okay, on import restrictions. So this is important because this is a discussion we have been having with the authorities in general. So it is important to note that adjustment that has happened to the currency is, again, as I mentioned a few moments ago, is understood, and it reacted to economic fundamentals. Import restrictions don't have a significant role to play over the long term. They should not have a significant role to play over the long term, because the idea is that the economy needs to adjust to its macroeconomic fundamentals. In general, we advise against broad-based import restrictions for stabilizing the economy. In fact, I would say, the government has been moving in the opposite direction, in the right direction, in that they have steadily relaxed some of these crisis import bans, for example, with the import on vehicle import, the ban on vehicle imports, which were lifted early last year, and which helped spur very strong economic activity and very strong revenue for Treasury. And so since then, the other import control, and so we are discussing a lot of these issues actively now with the authorities, and we have a similar discussion also with our executive board. So what was the last question again from Rada? I wrote something down, but I cannot read my writing now.
It's on the fiscal.
Okay, could you repeat the question, please?
Yes, it's from Aman on the fiscal side in Sri Lanka. What are the IMF's main concerns?
Yes. Okay. Okay, so I think I hinted to that both in introductory remarks and while I was answering some questions. Revenue has been quite strong. There has been quite a lot of good improvement on general taxation and on how administrative gains and debt collection. I will say that we are a positive supply price. Last year was a very strong year for revenue, more than double the targets that we've had, and for the primary fiscal surplus, for example. And we are very happy, and we see the significant fiscal space that has been rebuilt because of that. Now, it is important to note that this outperformance, the strong overperformance in fiscal revenue last year, was primarily due to the very large windfall from motor vehicle duties and import taxes, and some underperformance in spending in capital expenditure. So we want the tax base to be broad and not to be penalizing or to over putting too much weight on one particular item, such as motor vehicle imports or income tax or VAT or anything like that. It should be a broad tax system and a wide net. At the same time, there should be more careful spending of that revenue so that all these windfalls, all these important gains that the government receives from taxation should go back to the country and help the economy grow faster. So we don't have concerns per se, but we want to see better execution, ongoing gains from revenue, and a broader and more representative tax system. I realize we're running out of time, so let me pause here, go back. Let's do one more round of questions, please.
Okay, so we have Gold FM. Please go ahead.
Hello, everybody. Can you guys hear me?
Yeah.
Yes.
Fantastic. Thanks for taking my question. Now, the medium-term risk. Now, this is I'm quoting from the Staff Country Report. The medium-term risk analysis shows the gross financing needs financeability index at 17.9 against a high-risk threshold of 7.6 and a missed crisis probability of 54.5% for 2025 to 2030. Now, with growth remaining weak and remittance inflows uncertain, are these risk levels materially different from where Sri Lanka stood at 2022? And are the current buffers generally sufficient to prevent a return to debt distress? Thanks.
Thank you. Sharijat, please go ahead. Sharijat, sorry for mispronouncing the name. Seaman? Oh, below the hand. So there's only one last question from Manel. She joined a bit late. It's about the cost recovery for electricity. You answered this, but let's give her another round, please, very briefly. And then we end the round of questions. Thank you.
Okay, thank you. So first of all, on the GFN and issues regarding, can you hear me okay?
Yes, sir. We can hear you.
Yeah, okay, great. Sorry. I hear a lot of echo. I'm sorry. Okay, so in the medium-term risks and the DSA that you mentioned, 17.9 to 54.5. So yes, so this is a dynamic exercise that gets updated whenever we have a staff report or when we have a review, And this it follows a very standard methodology that we use to judge the debt sustainability of the country now and going forward. So this harks back to what I've mentioned about high risks to that. Yes, you're right. There is still a large growth financing need that should continue to be observed very closely. These assumptions hinge on continuing strong fiscal performance and revenue-based fiscal consolidation. In other words, the country needs to maintain at least 2.3% of GDP primary fiscal surplus, cap its expenditure at the agreed amount under the PFM rules, so the 50% primary expenditure, and assuming having certain assumptions about growth, real economic growth over the medium term, and inflation staying around the central bank's inflation target around 5%. So with these assumptions, yes, there are sufficient buffers to absorb those risks and continue seeing debt to GDP, and lower and lower and converging to a more sustainable 80% or so. But there are significant risks around this, and this is what we mentioned about the need to remain very vigilant and continue pay close attention to economic conditions. I know we didn't ask this question, but a related question that gets asked often, and maybe I may as well answer it now, about the big repayments in 2028 and before. These are already priced in. We have them in our forecast and in our outgoing repayment profile under the DSA, and this is already included, including also the repricing of the macro-linked bonds, which you may want to be asking as well. Finally, on cost recovery, both for electricity and for fuel. So very important, these were prior actions for the program in order for us to go to our executive board to request for the review to be completed. We had to have significant assurances that they were met, and they were met. We had strong discussions with the utility company, with EUCSL, the regulator, as well as CPC, the fuel supplier, under the parameters of how we define cost recovery for electricity and how we define cost recovery for fuel. They were satisfied. For fuel, it's very important to note there is significant cross-subsidy between different fuel types for consumers. And so, yes, there is cross-subsidization between different types of fuel, but all CPC, the fuel company, observes fuel cost recovery now for the month of May, and our hope is that it will continue for the following months on a continuous basis. For electricity, same discussion, where we have seeing the parameters of electricity has been increased twice, 10.9% if I remember correctly, in end of March, and 11% more recently in May. There will be another discussion about Q3 submission, but it's important to note that under the assumptions that the PUCSL has drawn to deliver this 11% increase, there is also a use of this subsidy that the government has made available to consumers of electricity, about 15 billion rupees, that is being incorporated in the calculation of the electricity cost recovery. And under assumptions, those prior assumptions were met. Okay, I believe I addressed everything. Folks, I will always value your very good coverage of the IMF program, of the authorities and the government's efforts vis-a-vis our program and economic agenda. I want to stress, I always welcome your your coverage and your questions. Martha Vodomika is based in Colombo. We receive a lot of questions, and we try to respond to them as quickly as we can and continue a very strong engagement with you. I think you have seen me. I have always given my commitment that I see you every time I come to Colombo. We hope to come to Colombo again, obviously, for the upcoming 7th review and in between. And I will continue being in close touch with all of you. Please continue staying in touch with us as well. We value very much the great contribution you have in bringing our message forward. And thank you very much for attending.
Thank you, Evan, and thank you, Martha, and thanks our participants. We have come to the end of this press briefing, and everyone, I echo Evan's words on appreciating your participation and following up with us. I hope we are delivering to you guys. That some of you asked about the transcript and video recording. You can access this through Teams through the link that we shared with you, but we will be sharing the transcript hopefully by tomorrow on the website. And that brings us to the end of our briefing. Have a good rest of your day. Thank you.